Selling put options is one of my favorite option strategies, as you can use it whether you're a trader or an investor. The trader mindset looks to generate returns on the premium collected, whereas the investor mindset sells put options to generate returns while they wait for the stock price to fall. The main difference between traders and investors selling put options is that traders do not want to be assigned the stock and will usually exit or roll their positions before expiration. On the other hand, investors are happy to be assigned the stock at the strike price that they select, as they are looking to hold the stock for the long term. So in today's video, I'll be putting my investor hat on and sharing with you two put option positions I placed on Google and Tesla. And if you are looking to trade or invest using options, I strongly recommend that you smash that subscribe button and gently tap that bell notification, as I put out new content every single week to help you become a better trader and investor. Now, Google and Tesla stock price has taken a massive tumble in 2022. Over the past year, Google and Tesla share price is down 35 and 66% respectively. So is now the time to buy Google and Tesla stock? One way to determine this is to calculate the overall worth of the company, also known as intrinsic or fair value. There are a number of methods to calculate intrinsic value. One of the most popular ways is using a company's future earnings. I have created a brand new free indicator called the OGT Intrinsic Value Indicator, absolutely free on TradingView, and it will help you calculate any company's intrinsic value using its earnings. Once all the input assumptions have been entered into the indicator, it plots the intrinsic value of a company based on your low, medium, and high earnings assumption. I have created a detailed tutorial video on how to set up this indicator, how to use it, which is linked down below in the description. Now, here we have Google stock with my earnings assumptions already inputted. You can see we have a high intrinsic value of $90.92, a medium assumption of $74.59, and a low assumption of $60.03. Google's current share price at the time of recording was $90.44. So if you believe your high earnings assumptions, Google is currently at intrinsic or fair value. Looking at the three assumptions, I believe Google's intrinsic value is somewhere between the high and medium assumption, so around $83. To add a little more margin of safety, I decided to sell the $75 put option, where I generated $58 in premium. I just got paid $58 to buy Google stock. How cool is that? Now, because I'm investing, I'm not too fussed on my return on capital. So if we calculate the $58 divided by 100 shares of Google at $7,500, it works out to be 0.78%. Now, which is not great. And if I was trading using options with Google, I'll be looking for a higher return. But remember, I'm not trading Google, I'm investing in Google. So I'm getting paid to buy stock at a price I want to buy. Now, if we have a look at my other option position in Tesla, you can see in the stock chart, it also has my initial assumptions added to the indicator. Similar to Google, it spits out a high, medium, and low assumption. As I was more conservative with my assumptions, I like the medium assumption of $85.78. So I decided to sell the $85 put option, and I received $134 in premium. So what happens at the date of expiration? So if Google or Tesla's price is below my strike price at the day of expiration, I will be forced to buy 100 shares of the company. I'll be looking to hold those positions and average down if Google or Tesla continue to fall. But what I can also do to compound my returns is start selling covered call options. I'll link a video down below on everything you need to know about covered call options. So I hope this video gives you a good overview on how I like to invest. Please make sure you like this video, and if you found it useful, I encourage that you watch the next video on the screen, which is my step-by-step guide on how to use the OGT Intrinsic Value Indicator and how to calculate a stock's intrinsic value.